What's up, my Financial Fit fam, and welcome back. Today I'm going to run you through one of my favorite investing apps, Robinhood. Now, if you don't have an account already set up with Robinhood, just go into the description below and use that referral code. You'll actually receive a free stock valued up to $218.75. And the best part about it is you don't even need to make a deposit. All you need to do is link your bank account. In today's video, I'm going to run you through all the buy order options that they offer through the Robinhood app. It's going to get a little wordy, and we might get a little confused, but just hold on to your boots. You'll get it. I'm a believer. So let's get going. And of course, before we get started, I gotta ask you to smash the like button and subscribe because it helps push this information out to more people. So for today's purposes, we're going to be talking about specifically the buy order options. Now I'm going to create a whole separate video on the sell order options. And if you can imagine, whatever we discussed today, it kind of works in the inverse. So if you want to get a little jump start, you can read more through the Robinhood app as it gives you educational tools as well. The first thing you got to do is select a stock in Robinhood. You can either search by the full name of the company or by the ticker symbol. It's completely up to you. For today's purposes, we're going to use Apple so that way we can make it more uniform as we go over the different buying order options. After searching for Apple, scroll to the bottom, you should see trade. Click there, you should see a pop-up for buy. Let's click on buy to get things kicked off. This first page you see is what we call the market order, or in this case, it's the market buy. You simply put in the amount of shares that you want to purchase. It tells you the current market price, and below it you should see an estimated cost. So why an estimated cost, you might ask? Well, remember, as you're going through this transaction, the price is still moving, can move upward or downward. So the price that you see on that screen might not be the exact dollar amount or cent amount that you'll be paying, but it should be relatively close unless there's a huge price swing. A market order, whether buying or selling, will give you the best current price and it will execute that trade immediately. Now let's take a deeper dive into one of the shortcomings of buying at market price. You're not going to find this in the freemium model of Robinhood, but if you're looking at Yahoo Finance while you're making your purchase, you're going to see something called the bid and the ask. So the bid is what someone is willing to pay for that share of that stock, and the ask is what a seller is willing to accept for it. You can assume that the ask will be a little bit higher and the bid will be a little bit lower, and that difference between the two prices is what we call the spread. When you purchase something as a market buy, you are purchasing it at the ask price, not at the bid price. So technically you are paying a premium if you market buy a stock. A market buy doesn't guarantee a stock at a specific price. It's meant to get in or get out of a stock immediately. Kind of like those old radio commercials. I want my money and I want it now. To make a market buy, add the number of shares you want. It'll tell you the cost per share. It'll do the math for you and give you your total estimated cost. Click on the review button. Make sure that all the information here is correct. It's so crucial. I've definitely bought the wrong amount of shares for the wrong companies by not reviewing this information. And it's so simple, just swipe your finger up and it will make the purchase for you. The great part about Robinhood is that you don't have to buy full shares if you don't want to, or if you don't have enough money to buy a full share of, let's say, Tesla, that's about $700. So you can buy fractional shares by clicking on the top right-hand corner and hit buy in dollars. I can't wait till that says buy in Bitcoin. You simply put in the amount of money that you want to spend on the stock. Below it will be the fractional amount that you're purchasing. You review, you swipe upward, and now you've purchased a fractional share of a company. Under conditional orders, there's going to be 5 options. The first of which is going to be recurring investing. This has regular intervals for investing that will take money unused from your Robinhood account or directly from your linked bank account and will purchase stock on specific dates and times that you set. This is how you start a passive investing approach. You can just set it and forget it. Set it and forget it. Set it and forget it. Just set it and forget it. You can turn it on and off as you please, or you can actually skip the next investment interval. So if you have a big purchase coming up or you have to buy holiday gifts, you can do that and just jump right back on the train. Recurring investing is a feature that is used by people that follow a dollar cost average approach. The purpose of this investing strategy is to accumulate stock within a company because you want to be part of its growth and its long-term potential. You want to buy the stock at regular intervals so that you can get the best price over an extended period of time. Once you get to the recurring investment space, click on the highlighted date above and you can choose your start date. From there, select the interval at which you want the investment to continuously take place, and these should be 4 options. Choose the one that best suits you. Now I personally choose the bi-weekly option because I get paid every 2 weeks, so that money hits my account and then goes right into the investment and I don't have to even worry about it. Choose the account you want your funds to be pulled from, then enter the amount that you want to invest in that stock. Swipe up and it will set up your recurring investing. You can set up your recurring investing for as many stocks as you want. If you like what you're getting so far and you find that this information is valuable, don't forget to subscribe to this channel. We've already talked about a market buy order. This next one is going to be just as important. And this is a buy limit order. This allows you to set the price that you want to pay for a stock. Let's say I feel Apple is just too expensive right now and I'm willing to pay $120. I can set up a buy limit order for $120, but my order will not be filled unless the stock comes down to $120 or lower, and it will give me the stock at the best price. Now here's the poo-poo stink end of the bargain here. If I wanted to buy Apple at $120, but it only goes down to $121 or $120 and 1 cent, even worse, and then all of a sudden shoots up 10, 15, 20%, I've missed out on all that gain. Why use a buy limit order? Well, if the stock is volatile, it's moving up and down really quickly and the investor is fearful, or if you have a set price in mind, you're gonna use the buy limit order option. Start off by setting your buy limit price. Remember, this is the price that you want to pay for this stock. And then you can also look at the time frame in which this order can fill. Do you want it to be within the regular market hours, or do you allow for extended hours trading? I personally prefer to only use the market hours. On the next page, you'll choose when this order will expire, and you have the option between within that day or within 90 days. It will then ask for the amount of shares that you want to purchase. The best part is on this screen, when you look at the estimated cost, that is the most that you will pay for your purchase. Because remember, with a buy limit order, you are saying this is the max dollar amount I'm willing to pay for this stock, but I will pay less. The 2 most fundamental orders to understand are going to be market and limit. Get to know those terms very, very well. All right, now we're going to move on to a buy stop order. Yes, I skipped one. Don't worry, I will come back to it. This purchase is triggered once a stock moves through a certain price target. Once that price is reached, the order then turns over into a market buy or sell. In this case, we're going to talk about buy, and that purchase is made immediately. Investors use a buy stop order because they believe a stock is ready to break out. In the case of Apple, I'm going to set my buy stop order at $130. Once that price target is touched, that order will then become a market buy, and it will automatically and quickly make my purchase of Apple shares. Well, if I'm so convinced that Apple is going to break through $130 and just go to the moon, why not buy it now at a better price? Well, for those that follow technical analysis when it comes to trading, there's a thing called resistance, which is the ceiling of which a stock really can't break through. When it does break through resistance, it's usually because there's some kind of catalyst that not only pushes it through that barrier, but continues to push it upward. So you're catching the momentum. To set the buy stop order, you simply set the price, the length of time of which you want for the expiration, and the number of shares you want to purchase, hit review, swipe up, and you're in there like swimwear. On to the next one, on to the next one. Freeze. Somebody bring me back some money, please. Now we'll go back to the trailing stop, and in our case, the buy trailing stop. So in the buy stop order, we set a price that would then trigger the market buy. In this case, in the buy trailing stop, we're going to set a percentage above which the current stock value is trading. That will then trigger our order and make our purchase a market buy, so an immediate purchase. A buy trailing stop is used to catch the stock's momentum, and it's also meant to minimize losses if the stock does move downward. Let's go back to our Apple example. I set my buy trailing stop at 3%. Trading opens up the next day and the stock goes down all the way to $120. If I had my order active for at least 90 days, my trailing stop actually follows the price of the stock. So my new buy trailing stop price is now $123.60. It's 3% above the $120. Now Apple bounces back up, the stock hits $123.60, boom, my shares are filled. Bada bing. To place a buy trailing stop, set the trailing percentage, the length of expiration for this order, then the number of shares you want to purchase. Hit review, swipe up, your order's been placed. Last but not least is the buy stop limit order. Now we've set stop prices before, but now instead of it being market buy like it's been several times in the past, we're also going to set a limit price. When the stock has a stop price, it will trigger a limit order, meaning you will buy that stock at a price that you want or lower. So now it has to meet two conditions. Why do investors use a buy stop limit order? To limit losses and also to protect profits if the stock does move in the wrong direction. Let's go back to Apple. I set a stop price at $130, but I don't want to pay $130. I think that's too much, but I'm willing to pay $129. So then I also set a limit price at $129. In order for this order to be filled, the stock would need to touch $130 or go above it, and then come back down to $129 or below for my orders to be filled. Traders will use this order in order to catch the swing in the stock or to buy a stock on a pullback as they expect it to go up further in the future. To get a buy stop limit order going, you set the stop price, then you set the limit price, then the length of expiration, and then the number of shares. Review, swipe up, good to go. This is a lot of information and the terminology can be confusing. If you click on any of these order types, in the top right-hand corner will be a little information button. If you just tap your finger there, it will give you a visual demonstration of what the order type is and how you can expect it to affect your purchase or your portfolio. As an investor, I use market, I use limit, and I use the recurring. The other buy order options are going to be more so for trading, but it's a good idea to get familiar with them so you understand how the market works and how you can place your orders in different ways for you to be successful with your portfolio. Now, as always, save, subscribe, invest, grow. Ciao, ciao.